What's going on, guys? Sound good? Everything working out this time? See, look at the chat really quick. Get my bearings. Make sure that we are all set up. Get rid of Spotify. And yeah, let's get ourselves set up with a chart. See who's in the chat. Go to the cutscene for the chat. Perfect. Set up. And we'll start momentarily. Okay, I'm going to minimize this stuff just so that I could see the chat at the same time as the streaming sort of suite that I have set up. See how many people we have in here. Good amount of people this morning, but most importantly, need to get those likes up. So good morning, everybody. It is 9:06 a.m. As you hear me slurp my coffee, you probably hear the ice in it. 9:06 a.m. New York time on Friday. So happy Friday. For those of you that are not caught up yet on Friday, for those of you that might, it still might be Thursday. I'm trying to think if that's the case right now, considering where we are on the big old globe. Either way, good morning, evening, night, wherever you are. Thank you for joining us. On behalf of my partner Josh Rager and I just want to thank you for tuning in to the BlockRoots YouTube channel, your source of non-sensational crypto market updates and trading and investing education. As a reminder, it's an education, it's an opinion. All of the things that we go over are our opinions. They're not to be taken as financial advice. None of this is tailored to you. This is specifically how I'm going about the market, what my opinions of it are. And yeah, moving along. So we have a good amount of people in the chat, but I need to see that the likes catch up to the concurrent viewers. It looks like we don't have as many people as we had in the last video, in the beginning of this video, and I think that it might be because of the I put the wrong time on the front of this one. I didn't update the time, so it still said 2:05 p.m. Eastern Standard Time, and it obviously that's, if someone hopped onto the YouTube and saw that, they might think, oh good, I'll come back in in 4 hours, right? Or yeah, no, in 5 hours. So okay, so we have Daniel. What's up, man? JE Math Max, like that. Jimmy Trendricks, what's going on? KRD Ross, how you doing? Okay, good evening, Michael. Pascal, what's going on, buddy? Sweet Canary, Pascal and Sweet Canary, both winners of the BlockRoots membership. Gerald Ortiz, how many member giveaway winners? There were 5, and we're just waiting on, I think we're just waiting on 2 to respond. So Pascal, Sweet Canary responded, and Cornholio responded. Okay, Mr. K, what's going on? Andre, Keld, what's going on, buddy? Ripcord, I fell asleep last night, so I got you, bud. So I sent you a message this morning. So last night, yesterday was my mom's birthday. I went over that, and all week has been my mom's birthday pretty much. It's how my wife works as well. Whenever it's her birthday month. But last night, just last minute, my mom and my sister were out. The birthday dinner was gonna be yesterday, and then it was rescheduled to Sunday, and a whole lot of back and forth. But my sister got dumped by some guy that she didn't even care about the guy. They were just talking for the last month and a half. So my mom felt bad for her, and so my mom took my sister out on my mom's birthday. My mom took my sister out to a really nice restaurant we all like to go out to. So my wife and I figured, what the hell, we'll go meet them. And so I ended up going out last night after I had a cup of a cup of chamomile tea. So I was like already shot, and then I got home last night. My wife and I watched a show that we started watching on Nat Geo called The Right Stuff, about one of the people in it is John Glenn, so about the space program. And after that I was just spent. So good morning, everybody. I think we have a good amount of people right now. And we got a good amount of likes, but if you could smash the like button, we will start up in a minute. As a reminder, so on the bottom right hand corner of the screen, there should be a BlockRoots B if you highlight it. So if you go to the bottom right hand corner of the screen, go where my head is, there should be a BlockRoots B. So you should see a B, and that is the button that will allow you to go ahead and subscribe. So if you're not already subscribed to the YouTube channel, just make sure that you go ahead and subscribe, because we really like doing these. I really like doing these, and I'm going to be doing them a lot. So we want to have as big of a family as possible, and trying to get to know you guys, obviously on a first name basis, even though it's pseudo-anonymous kind of fake names or pseudonyms. We'll just say they're pseudonyms, right? So yeah, but okay, so we got a few things I want to talk about. I'm not going to do this one too long, because we're not going to keep this one too long. Yesterday's was 2 hours, and you'd be surprised after you do. So from this whole coronavirus thing, from the pandemic, from most people working from home and using Zoom more often. I always use Zoom, period, because I've for the last 2 years I've been using Zoom. More so in the last few months, obviously, with this. But after you hop off of a Zoom, after you hop off of a Google Hangouts or a live stream, you are spent. You're spent. Like, your energy, your brain just feels like squeezed, because if I'm doing this right now on my own, I'm going on and on, hitting questions, hitting points, and not following a script. So making sure, trying to keep up with all the things that I have in mind to talk about. And then after that, I need like a recuperation period of 1 to 2 hours, just to sort of Zoom fatigue. Yeah, Lucas, absolutely. Just wrecked. Like, your brain is just, like I said, squeezed, feels dry. Okay, Adrian, Daniela, what's up? Okay, J.E., Lucas, Gladdy, Ecomienda, good morning. So yesterday during the stream, there was a point that I really wanted to hit, and I couldn't even draw it to memory. And I'm really happy that a buddy of mine, Kilgore, hit me up in the DMs after, and he said, "Hey, I know you were trying to remember what you were talking about yesterday. Was it this?" And it actually was. So we're gonna go over that. Okay. So the few things we're gonna touch on, just obviously some headlines, breaking news. I mentioned it on the Twitter post that we make fun of other crypto YouTubers, and yesterday I was talking about this, and one of the people that hops in the streams quite frequently lately is Crypto Cred, and he's a buddy of mine, and he's the only other person that I would advise that you watch on YouTube. And someone mentioned Cold Blooded Chiller and his streams and how his streams are informative, and I just never got a chance to watch his, but I'm sure he's a good source of educational content as well. But all of the other YouTube crap that I see when I'm because we're trying to grow the YouTube, we want to if I'm involved in anything, I want to crush the competition. I know that I don't want to crush all the competition because again, friends with Cred, I really enjoy his content, and I think that we can all win together to some degree because all of these other crypto YouTubers are winning together right now in terms of really monopolizing the viewers, right, or the views and the attention, and all of their crap is garbage. It is, I go on a crypto YouTuber. I'm not even going to choose one right now to single one out, but they're drawing crap triangle lines and just bullshit technical analysis, and they have no idea what they're talking about beyond just looking at a chart. They couldn't tell you anything about a market or the economy or economics in general. And meanwhile, their personalities on YouTube, they're marketers, and we know how that works. And we're just kind of tired of that, sitting on the top of the totem pole on YouTube when there's all this experience that is on Twitter. And for those of you that don't follow along on Twitter, my name is Cantorin Clark on Twitter, and my partner Josh Rager, he goes by Josh Rager, Rager actually. And so we're just trying to bring more of that heat to YouTube. So we're going to talk about a few things, again, touch on some headlines, stuff that I saw this morning, and then I want to really focus on pairs that you guys are interested in, because yesterday, as you could tell, I could just kind of freaking bowl on, right, with really no idea of how long I've been going on for, and next thing we know is coffee this coffee hangout turns into a 3-hour ordeal. So first thing I want to touch on, the leaked Tai Chi document reveals Binance's elaborate scheme to evade Bitcoin regulators. And this is pretty much going into how CZ and the bigwigs at Binance were essentially trying to set up a shop in the United States to sort of divert the attention of regulators while they essentially figured out ways to skirt regulation and to increase their user base from U.S. citizens. Okay, so from traders that are based in the U.S. and basically saying things like along the lines of, a VPN is necessary and you should be using a VPN, implying that, you should go around the rules that they have maybe listed on their website and still go about using Binance. And this is this is obviously a thing that they have somewhat protected against, because if you're non-KYC on Binance, you have to, you're limited to a certain amount of Bitcoin that you can deposit, or not necessarily that you can deposit, they don't care about that, but you're limited to the amount of Bitcoin that you can withdraw in a 24-hour period. Now, this is not something that most people are going to have to worry about. The fact that you can only withdraw 1 BTC in a 24-hour period, I think most people have no problem with that. I myself have been on exchanges where things like that have been the case. I was on Deribit and trading options, and I deposited a pretty considerable amount of money on Deribit, and I was just thinking in terms of, okay, I deposited this XYZ amount and I can't take it off all at once. That's fine. I could put it in USD though. I could put it in USDT and protect it, and I could withdraw it over the course of the next week if I needed to. Let's say that I put a couple $100,000 on Deribit. Yeah, I can't take it all out at once, but I could take it out in increments of 1 BTC over the course of 2 weeks, right? No big deal whatsoever. Not to say that that amount of money is no big deal, but it's not exactly something that is keeping people away, right? So this article is basically going to say that CZ was trying to figure out ways to get around regulators, and I gotta say, CZ catches a lot of shit, and I don't really necessarily trust Binance, but I don't have a problem with this because I think all of the regulation is bullshit anyway. I think that a lot of it comes down to the United States wanting to be the person who hosts the game, who owns the playing field, and they're going to try to squash their competition and put these unregulated exchanges out of business, or force them to consider abiding by their rules, And there's really nothing you could do if you are a foreign entity and you are offering these types of services. You could only try to skirt regulators so much before the SEC comes knocking at your door. Now the trouble is that no one really knows where Binance headquarters is. So this is, I guess, this is an interesting factor to consider. But one of the things that is, I guess, commonly comes up about why regulators are becoming a lot more strict is because they are planning on, or there is a ETF that is in planning right now, or they're planning on releasing an ETF or multiple ETFs. So all of these other exchanges are not something that they want to have to consider when it comes to price discovery and to maintaining some type of secure market. Right, so let's see some more comments. Lou Christopher, Jake Purdy, Satoshi, what's going on? Data Dash, Cred, Loma. So yeah, Cred and Loma, I know those guys well. They're both phenomenal. Loma's another guy too. I forgot that I talked to Loma on and off in DMs, and just great guy. And I forgot that he recently has started making YouTube videos. So all the better, because that's the thing. There are so many crypto YouTubers. If you just search Bitcoin price, and you see these crypto YouTubers, and their faces on the freaking thumbnail, and it's like, and it's got like a Bitcoin B, and they're like, and it's like they write something sort of exclamatory, or really edgy, something about the price of Bitcoin, something to create some type of emotional response, and then they have their face, because YouTube algo prioritizes shit like that. That's why we want to get the likes up. But all of those guys that are doing that, they really have no background in markets. They probably none of them trade, or again, they're here to sort of take advantage of a hype cycle, right? And yeah, whatever, they're making good money doing that. But I think that there's a lot of people that should be in those spots, and I don't think that it involves any. I don't think that it involves anything that you currently see besides some of the ones that I've gone ahead and mentioned. What's going on, Young Talopa? So this is good. So we have Cred that usually is in here. Loma hasn't stopped in, but we have Young Talopa as well. And Young Talopa is another really great source of educational content. He trades using market profile and order flow as well. He's been around in crypto Twitter for a really long time. So I always say, when it comes to, I hate promoting BlockRoots when it comes to promoting our educational content. I love to tell everyone to go out and check everything they can for free first. But if you haven't taken Young Talopa's course, I've seen some of his YouTube videos. Not only does he have a fantastic accent, but he is really good at communicating ideas in a really simple manner as well. So if you want to learn more about order flow and market profile, and you've already tried out BlockRoots, go ahead and try out Young Talopa's as well. So Sweet Canary. So that's how I say it, Talopa, right? Or Talapa? I used to think of you as Tilapia, man. Data Dash, rookie. Okay. When you're new in crypto, everyone seems to know what they're doing. Reality is most larpers. So, yeah, there is sort of a play on inexperience. And I used to joke around back in the day and say that a lot of the YouTubers and LARPers were really just a page ahead of all the people that they were teaching. They're reading through technical analysis of the financial markets, and and they're a few pages ahead of the people that they're teaching. So, yeah. Evan Koa, what's going on? And DXT. Okay. All right. So, yeah, tilapia. That's what I used to think. You read over it fast. So going over that CZ stuff, just thought it was an interesting article to touch on. And then more recently in CoinDesk, I'm not someone who actually just picks up CoinDesk and reads it every morning, but I thought that this article was interesting. So it's Bitcoin transaction fees rise to 28-month high as hash rate drops amid price rally. Now, I'm not as I've gone in before, my area of competence is not necessarily blockchain or the technology or, any kind of fundamentals with regards to crypto. But the meme pool is essentially all of the unprocessed transactions. And we see that is it's more or less at the all-time high. So if we go to the hash rate, which is the processing of this, and the meme pool, which you could think of as sort of like the waiting room for transactions, we can see that we're basically at levels that we haven't been in since 2018. Now, a lot of the times when you see things like this, you're going to look at the last point in which is referenced. So in this case, okay, we were we're above the 2009 highs. Okay, we're above that in price, but oh, now we're back at where we were in 2017, 2018. Oh, we're below that level right now. This must mean that Bitcoin is sort of found an interim top or is potentially topped in general. Again, this is not something that is going to dictate whether or not we still see this macro growth driver in play. It's not going to dictate whether or not we see retail continue to come into the market. This doesn't obviously have any bearing on the fact that the market is right now very spot driven. So this is market generated feedback, and you could say that things like this, when it comes to on-chain analytics, you could say that there is in some ways sort of this does maybe count as Bitcoin's unique or idiosyncratic form of technical analysis, things to consider. I don't like to really add too much of this stuff into my day-to-day. I just find that I like to pay attention to, again, 3-4 things. When I start looking at stuff like this, then I start second guessing the technicals that I really prioritize. But this is something that you're going to see shared around on Twitter, and you're going to see it sort of spun in a fashion of, oh, we're at the high, we've already, alts are kind of topped out, the mean pool transaction count and hash rate are blown through the roof, so, Bitcoin has topped out. So I figured I would just cover that and say that I'm not really concerned with it. This is not, as you saw with ETH, speculators, they will end up. So when people were speculating on the price of ETH and with DeFi, we saw that ETH was not very efficient. That's not going to really stop people from chomping at the bit with buying ETH when there is sort of this speculative momentum type craze. The same thing with BTC. This kind of sucks, right? So it sucks when there's network congestion. I remember, and this was why I never used to use Bitcoin to send from exchange to exchange. I remember depositing Bitcoin or sending Bitcoin from one exchange to another, and this is why I used Litecoin in 2017. I remember doing that and taking sometimes, half of a day, right? And that sucks. And of course, that is something that might, steer you away from that particular cryptocurrency, but it's not going to stop anyone from again, when the trend is moving up, it's not going to stop them from hitting the long button. Okay, I think we've gone over the crap on the CoinDesk and CZ, so we'll get into some of the charts. Randall, what's going on, buddy? It's supposed to be adjusting down because something about the rain too, right? China is moving. Okay. See, all right. So I saw something about a rainy season. I saw that in this more recently. Memory. Oh, okay. Gotcha. Mempool. Thank you. So. Thank you very much, DXDT. Are you expecting a drop today, being the end of the month, last Friday before the election, and COVID news on the rise? Yeah, there's a lot of different ways you could look at this. Let's go to the charts. So a lot of different things that you could look at with regards to traditional markets and the current volatility we're seeing. For the last few weeks, I've been sharing the VIX term structure just to show you how elevated things were going into the election. So going back over a month and a half, 2 months ago. The reason why I was sharing the VIX term structure was to show you that the values were well elevated all the way into January. So we have values that were, at the time, they're around 28, 29, 30. You don't want to say standard VIX or average VIX, but normally the VIX is going to fall below 20. 15, 20, or 10 to 20. And that's even, at that point, I would say maybe that's the normal sort of distribution, so one standard deviation. But we see elevated VIX going into the election. The idea was people were assuming that the election was going to be a contested election. I think we're kind of on board with that. I don't think that anyone thinks it's going to be a smooth transition. Now, one of the problems with something like a Republican coming in versus a Democrat, or in this case, let's just use Joe Biden, for example, is the idea of increased rates on capital gains. So long-term gains, short-term gains. Now, all of this stuff is always, it's spun around. You never really know exactly what the accurate, what sort of the hard truth is. But if you are, let's say you're a legacy market participant, let's say you are, a fund, let's say you are a large private investor, you're a cryptocurrency trader. I know personally, if someone is coming into office and they're going to increase capital gains rate, they're going to increase taxes in 2020, I will sell things in 2021. I will realize those gains in 2020. And sort of the aggregate of that behavior is going to create impact on the market, obviously, right? We're going to see selling pressure, and you're going to see this premature selling pressure going into what is, more or less right now. It's not determined, obviously, because the election is, we're still in polling. Election day is tomorrow, but I think a lot of people are anticipating that, and you're going to see this sell pressure going into the end of the year, especially if someone like Joe Biden is elected president. Then again, I talk about how Donald Trump is good for Bitcoin and how Biden could be good for Bitcoin, and that's because if we have someone like a Democrat and we have a weak dollar, we have a strong Bitcoin, right? We've seen that correlation. I don't think that correlation is necessarily something that might persist. Meaning, I don't think that if you have a strong dollar that it means that there's going to be a weak Bitcoin. I think that there's a lot of short-term spurious correlations right now that are actionable, but I don't think that they necessarily need to persist. I think that Bitcoin can be sort of, I think that Bitcoin can do exceptionally well in a weak dollar environment and a strong dollar environment. I think the same way that it could sort of be this amalgam or this, let's say, chameleon and go from being a risk-on asset to a risk-off asset. I think it's always going to be a risk-on asset. So I think that any time that you have, equities moving up and catching a bid, that Bitcoin's always going to be a higher beta play on equities. I don't think you're ever going to see a time where, it's equities moving up, gold moving down, and Bitcoin's, deciding to move down as well. So I am, let's just go back. I lost the comment screen. I am, what did we say? As far as the drop, we've had a decent pullback in traditional markets, whether it's due to the fear of COVID, whether it's due to the election. There's just going to be a lot of, going back again, the last 2 months, just been saying that there's going to be a lot of volatility, right? You just bet on volatility rather than direction. Okay, if ETH remains at 380, I'll pick up more. Can you check Ocean? Okay, so yeah, we'll look at some charts. Today across the board, I've been talking about how I don't think that DeFi is in a position to put any type of recovery that isn't some dead cat bounce. And you could look at a lot of different things, right? You don't have to just look at specific DeFi that's getting slaughtered. You could look at Bitcoin dominance, which is increasing. So Bitcoin dominance going up. ETH right now relative to BTC. So ETH relative to BTC, poorly performing. Said that backwards. Performing poorly. Performing poorly. And some people might consider ETH as the benchmark or the S&P to the entire alt universe. It is a leading confidence indicator, but I would just say that right now, if you're looking at alts like Wi-Fi, and if you're thinking that DeFi is due for another run, DeFi just went through its own first hype cycle, so it's sort of like it's well behind Bitcoin. Actually, I don't think that they're right now moving together. I think that they're sort of at different periods in time. Bitcoin went through its hype cycle where it went up on retail interest, right? That's not the growth driver now, okay? The growth driver is no longer for Bitcoin. Oh, what is a Bitcoin? Everyone else is buying Bitcoin. I got to buy Bitcoin. Of course, there are some people that might still live under a rock and don't have an allocation to Bitcoin, and now they're being forced into Bitcoin because they're going to be a last mover at that point. I think you're seeing this more with traditional market participants, and I'm talking more along the lines of asset managers. But there's no one right now who's like, oh my God, what's Coinbase and what's Bitcoin, right? Everyone at this point has heard about it. I don't think that it sort of draws up the same negative connotation that it used to, with not being taken seriously as something that's going to be around. But this is not the growth driver. For DeFi, there is that growth driver that just took place, where it's like there's a bunch of retail investment, there's a bunch of retail money, and no one knows what DeFi was other than it's decentralized finance, and what it gave was tremendous yields, and people are just chasing this, right? So this went through its own hype cycle, and just like the Gartner hype cycle, when something becomes new and sort of fashionable, you see that it go through this meteoric rise, and there are great ideas on paper, the same as going back to the ICO days, white papers, but the tech isn't there yet, right? People are buying in anticipation that the tech is sort of right behind them and it's going to lift them, it's going to act as sort of the tailwinds in their sales, but it's not, okay? The same thing we see with DeFi. The ideas are awesome, the ways in which this will benefit finance right now, our current system, fantastic, right? But it's not even close to being at that point yet. So people buy in anticipation of that catching up, and then as soon as we start losing major levels within market structure, the trend starts to fall down on itself. Well, you realize that it's got a lot longer time to travel. Rather, it has a lot further to go before we're actually at a position or in a position where you're going to be buying things with a level of certainty that, oh, this is going to play a major role, right? This is, fundamentally speaking, this is making leaps and bounds. Half of this shit obviously should have given you it should have been a warning shot when most of these things were being named after things in a produce aisle or in a grocery store. So when it comes to all of alts, so if you look across the board right now, a lot of this stuff that you're seeing that's performed poorly in the last 24 hours, you'll see that it's performed poorly in the last week, and most of this stuff is things that would fall under DeFi, right? Bitcoin is in a position right now, and I said this yesterday, where there's, if you're on the sidelines and you're not sure what you want to get into, you're keeping an eye on Bitcoin because it is almost at the previous all-time high. So the last thing that you want to do is be sidelined, okay, or be in something else as Bitcoin moves through the all-time high. You're going to see that this is going to create sort of a vacuum in an area that already seemed vacuous, right? In alts where you hadn't seen any life in them whatsoever, and they've looked like they've been bottoming out, you'll see them drop another 50% because people are going to be sucked out of those, and there'll be this fleet to quality effect. I think on the same note, because Bitcoin is extended, although it's not necessarily extended where we have this vertical price action over the course of the last few weeks, this has been more of a gradual basing out, and it's actually been a healthy trend. I mean, when we look at this, it's thrown a lot of people off because they've had these pretty decent pullbacks and these longer consolidations, but that's actually how the market moves most of the time, right? It moves 70% of the time around that figure. It's going to move sideways, and then you go from the market being in agreement, right? Buyers and sellers being in relative agreement, and that's why getting involved in the middle of a range is like you're getting involved where everyone agrees on these prices, right? And how are you going to get involved in the middle of the range and have any kind of edge as to where it's going to travel next? Versus the market comes out of those consolidations, those bracketed periods, with an imbalance, right? There's an imbalance between buyers and sellers. Just consider this as a disagreement. The market moves impulsively and it moves on to the next area of agreement. Bitcoin has been doing this, so we haven't had any period in which it's overextended. But on the same note, let's say we get a pop up and we get a major correction and we come back down to 11.9, 11.8. Just pick an arbitrary figure. Let's say the market comes up here and you have one of those $500, $1,000 candles. None of this bodes well for alts. Okay, alts again are still sitting on a precipice. It seems like alts always are at a floor because you start seeing a structure that looks like, we'll go to Wi-Fi. You start seeing a rounding out structure at a previous level within market structure, and you think, oh, that looks like a bottom. Okay, the bottom can continue to be broken with alts. There is no bottom. I always say that it's going to look like an asymptote on the longer time frame. So if this is the zero value, it's going to get as close as possible to zero without actually becoming zero. So if you see an alt that drops 50% and you think, well, it can't drop anymore, well, trust me, it could get a lot closer to zero. And it doesn't help that alts are, in Satoshi value, you can go down and you could just continue to lose that value over the course of months and months. So I don't think that alts are in a position right now to outperform. And I think that one of the leading indicators of them being able to maybe be allocated to a little bit more seriously is when you start to see Bitcoin dominance drop. I think it's after Bitcoin makes a higher conviction move for the next few months, whether that means that we move down and we begin to consolidate in range, or we move up and we break the all-time high, and then we have, I probably don't want to get to alts at that point either way. But I don't think you're going to be best suited to get into alts unless you see something like ETH moving up and Bitcoin dominance moving down. ETH is a pretty good barometer for the rest of the alt market, and right now it just doesn't look like that is a healthy place to be putting your money. And I know that there are DeFi pairs that are popping across the board. So if we just look at this is something that I talked about this in BlockRoots. It's something that Josh shared recently, and it had a really nice technical structure, right? It had a technical structure, these triangular patterns. I don't focus too much on this stuff. But then what happened? Some whale came into the market and market sold a ton of supply, right? And the market just completely shit the bed. Now, when it comes to DeFi, I don't give a whole lot of weight to technicals, right? Technical analysis. And that's going to sound silly. Part of the reason why structure is so useful in the larger pairs And in the more established pairs is because there's a good amount of hands at play, right? And a lot of people are actually paying attention to these key levels within market structure. I call these key contextual levels, the higher time frame levels. They're where all participants are forced into the market. And with DeFi, it's taking on the structure of a trending market, but there's not a whole lot of psychological support and resistance yet. It's not like these levels have been thoroughly established to where we all can agree that's a good buy, right? And even the concept of a value buy in crypto is a a somewhat weak concept because it's all price driven, right? Higher prices beget higher prices, lower prices beget lower prices. But when people look at a structure like this and they give a whole lot of weight to, the swing highs or swing lows, and this is a structure that's only been around for the last 2 days, there is really no weight to that, okay? What it is telling you is that yes, on a very surface level, the trend is upward, okay? You're going from a period of, higher highs, higher lows, but this is a 12-hour long trend at this point. Someone can just come into this and completely nuke it. And, at that point, if you're relying on technicals, it's fine if you're not going to get into it anymore at this point. But it's at this point, if you're stopping out of these things, you're not on a centralized exchange. You're on a DEX. You're probably going to get slipped a ton. And it's just not as reliable, right? It's not as reliable as charting something like something like Bitcoin or ETH or Link or even Wi-Fi, things that have more eyes on the chart, all right? Okay, random, what is your favorite home? Just making sure I hit some of these before we get into Bitcoin. Okay, what do we have? All right, so people ask me about Shroom all the time. I want to get into Bitcoin after this because we've kind of been doing a little bit of a ramble. So I got out of Shroom. I think I got out at what I got in. I got in at what I got in. I entered in Shroom at what I was in, at 1 cent or 2 cents. I was well in back here, and I mentioned this. Back here, I said, all right, I'm in Shroom, and I think it's going to 2x. So when Shroom 2x'd, okay, when Shroom actually, I didn't have a chance to just 2x, it's 7x. After it 7x'd, I got out. Could it have ran? Yeah. Was it during a time when there was still euphoria in the market? Absolutely. But you guys, if you've followed me for the last 4 years, you know that I talk shit about alts all the time. I don't take alts very seriously, and I operate where I put sort of this hard brake on myself a lot of the times, maybe sometimes too early. I did it in things like SNX. We shared SNX and we shared SXP on the in the newsletter. We were one of the first people to share that, and that thing went up, went up like 400% past the point in which I took profit. That's fine for me though, because I am more than happy to get out early than get out late. And I think that sort of the theme in crypto is for everyone to get out late. So after I 7x'd in Shroom, I got out, and I wouldn't have minded buying higher, but there are certain things that I need to see. And as soon as a trend begins to fall off and begins to lose major market structure, and it's not even something that has, again, those definitive levels within market structure, I just wait for it to hit the bottom again, honestly. So until it shows major sign of strength, which means it could be going higher, I will just let it be. And it did go on. So after Shroom 7x'd, it went from, I got out at Shroom, I think I got out at 11 or 12 cents. So it might have been around at 8x from my entry price, which was probably at that point around 1 cent. I can't remember my exact entry price, but it was on my Twitter page. But Shroom went on all the way up to, what did it go up to? If you look at the wicks, it went up to 28 cents. So I was looking at that, and you start doing that mental math, and I'm thinking, ooh, that would have been, I'm starting to count in my head, like, okay, I just left that amount of money on the table. Okay, oh my God, I just left that amount of money on the table. But you know what? The money that I had from that was a lot more than the day before before it 7x'd, right? So rather than being greedy, I was like, okay, I'm just going to step out of this, and if it's a something that is going to continue to do well, I'll wait for it to show me more signs, and I'll buy a little bit higher, or I'll be one of the people to scrape it off the floor. Now you have to pay attention to current market context and what's going on in the rest of the market, and not just this specific asset. And at the time, it was approaching a point where it looked like people were still chasing momentum, but everything wasn't rising together anymore. There was a disconnect. And if you guys remember on Twitter, about 2 months ago, I started saying, or it was about a month and a half ago, I started saying, there's a weird disconnect right now. I don't think it's going to be Bitcoin that disconnects. I think that Bitcoin is going to go on to outperform. and not patting ourselves on the shoulder, but one of the ideas was a lot of people are focused on this, and that means that people are essentially long DeFi, short Bitcoin. Okay, so people are meddling over here and they're forgetting about Bitcoin. Once Bitcoin starts moving, they're going to chase Bitcoin. So once there was this weird disconnect where the market wasn't moving uniformly, I was like, okay, this is the environment that precedes a major drawdown. So I got out, and thankfully enough, I got out. But where Shroom is right now, Josh is a long-term believer in Shroom. And what that means is if you're a long-term believer in Shroom, you honestly might as well not look at the chart, right? Fundamentals, they do win in the long run. But, that is not enough for me. I'm such a skeptic when it comes to alts. That's just the way it is, right? I can't sugarcoat it. I won't start going, some people when they're in an asset, they'll start looking for the signs that, it's got these plans and the team is good. I can't. I'll wait for the chart to start looking good, and then I'll start backing up the technicals from the chart with the narrative and the story. But when the chart isn't there, when there are more sellers than there are buyers, and when you have rallies that are constantly being sold into, that just tells me one thing, right? It just tells me one thing. So with Shroom, honestly, Shroom needs to recover this level. And I keep it very simple. Whenever I see a gap like this and the market has this sort of imbalance on the way up, that's not an area where I want to gain acceptance back within on the way down. Because more often than not, it's just a vacuum, right? There's really no memory there. There's no sort of price memory. And at that point, again, if you can imagine that I am saying just a few minutes ago that the technical levels are really important in assets that have a lot of eyes on them. Okay, so if this was a pair that had 4 years in the making, you could bet that this level will probably give a pretty substantial bounce, right? All of us know that this weekly level is very important. Okay, so, and it's not just that. There's going to be a lot of resting order flow, resting liquidity down there in anticipation of it being revisited. You sort of get those lucky moves sometimes. Scam wicks. Think of all the reasons why there might be a good amount of friction at that location, why you might have a turn. In something that doesn't even have the benefit of that psychological support or resistance, besides us looking at the chart in the right amount at the right time and acting on it, you could bet that when the price comes down to that level, it's going to have a higher probability of breaking it than holding it. So I think with Shroom, that if you're a long-term investor, you have to be prepared for prices to lose 50% of where they currently are right now. And we have different outlooks on assets, myself and Josh. Josh has a higher time frame opinion of this. I am I'm so fickle and I'm a cheater when it comes to alts, right? I have multiple affairs with plenty of different assets in the crypto market. The only one that I will constantly that I am constantly getting behind is Bitcoin. But that's primarily because I'm a trader and I look at these things like VC investments. Okay. When to value at the right time, swap and all for BTC. All right, so I'm going to start getting into BTC. Switch the chart up. Okay, so first things first, when it comes to higher time frame positioning, get rid of some of these. So we're in the Phemex comp still. Right now I'm not taking anything. I don't know how. Did I do this during yesterday's live stream? I removed these resting orders because I never got entered into that trade over here, and I was long from this, but when I looked back at the computer yesterday, I was kind of dumbfounded that I didn't get into this. I didn't pick this up. So right now I'm 16% up for the last 4 days, which is on the total account, that's good because I ended up depositing too much Bitcoin. But it's not even close to being able to take the number one spot. I think I'm ranked like 66 now out of 2,300 or 58. That's good. 16% is for trading this how I trade my personal account, that's fantastic. But it's not going to be even close to winning the competition at all. And I'm not going to start trading like salsa and just trying to completely degen. I'm keeping it kind of conservative. All right, so looking at the rest of the market, a few things that I want to look at before I make any higher time frame decisions. Nothing really stands out to me as this being a top. So where we currently are with Bitcoin, I don't think that we've topped. We haven't had any kind of parabolic move yet. We haven't had any kind of blow off. A few of the questions that I like to ask myself are: has price rather built a base? It doesn't look like we've really put in any kind of it doesn't look like we've come into any kind of supply or we've found any kind of higher time frame seller. If I'm looking at something like funding, which to me is not necessarily as important as the basis that funding is derived from, We are not at any extremes yet, so we have a pretty neutral funding. So if you see funding's positive and it's a 0.01 or 1 basis point, that is neutral funding. That's pretty much 99% of the time that's your funding value. Again, I say with the USD or coin margin perpetuals, USDT, USD margin perpetuals, those fundings might fluctuate more often because those are less liquid. So the funding is obviously a incentive mechanism in order to keep the futures, which is it's a front month essentially, the perpetual swap, in line with the index or the spot. So anything that's less liquid is going to be more difficult to keep in line. It's going to swing around that index more. Coin margin perpetuals, you still have a relatively neutral funding. So it's not like this is screaming out top to me. What I think, though, as I've said the last few days, is I think that we're going to just end up putting in another higher time frame range. Where we currently sit right now, so the levels that I'm interested in, same levels I've had in the chart for a really long time now. Currently sitting above this previous composite that we were auctioning within for the last, this was 4 or 5 days before we had this move up. I anticipate that this low is revisited. So I'm really interested in this 12,600, sort of 12,500 zone. So what I'm looking for is some type of swift move into this and then a quick response and recovery out. And then I think what we're going to be doing is ultimately just putting in another higher time frame range that bores the shit out of everyone, which is fine because this is good. This is good, and this is more or less something that you would want to see if you were saying that this movement was all organic and it wasn't something that was overly derivative fueled or maybe towards the end of its run. Just look at the previous structures, though. There is a sort of uncanny similarity between all of the first legs and how they've gone on to transpire. So I think that we're in that position right now where ultimately we're going to be putting in maybe just a shorter range at this point because we are consolidating at higher time frame resistance. So the levels that I have right now that I'm mostly focused on, if we'll just go to a cleaner Bitcoin chart so we can see this from the weekly still. So we still are sitting above the key areas within market structure that are really the things that I'm most concerned with for this higher time frame trend. If you start to look at this and you look at with something like a 20 period moving average, look at this on the weekly, all of these things are showing you that you shouldn't mess too much with the higher time frame positioning if you have a spot allocation in BTC. If you're looking at a 20 period, if you're looking at just market structure, all of these things, again, that are on the higher time frame, they're really just reinforcing to me, don't mess with it. It's going to be loose up here. It's during an election cycle. There's going to be a lot of volatility, but the trend on the higher time frame is intact. And the same idea I said on the previous videos, this structure was loose on the way up. I said on this retest, where again, I was, even Cred mentioned I was the loudest person about this retest. On the way down, it was loose on the way down. The test of this top side of this structure, it might be loose as well, meaning there might be a good amount of violation in areas that some people like to often say are, specific lines in the sand as if they're end-all be-alls. My areas on charts, so for example, if we just look at more recent daily structure, so we do have this inside structure that's forming. So this is not exactly, so if we look at something like my TPO chart, normally at the end of ranges, you're going to go from a period of expansion to compression. So this range was somewhat compressing, and now we've gone to a period of expansion again, and we've moved from being relatively tight, looking like we were going to impulse in a new trend, and now we're still kind of volatile, but it looks like we're more balanced out over the last few days. So we talk about this on BlockRoots. I normally try to pay a lot of attention to the 30-minute rotation size, because towards the end of a trend, around your 4 or 5 days into the consolidation, you typically see that the impulse is preceded around of a value that's around, it's under 35. So you'll typically see that your average 30 period, your 30-minute rotation size will fall anywhere from 25 to 30. It'll be towards the low end of the spectrum, which is one standard deviation below the average, which is around 55 or 60. So instead, we have this very messy structure up here, which to me just makes me think that since the market was able to move to the low and to the high and really not follow any kind of, have any kind of conviction to break outside of this, I think that we're ultimately just forming a higher time frame range again. So if you would consider the way that people look at an initial balance, consider this amount of dispersion that we've had after this break, and that the fact that that dispersion hasn't led to any continuation, it's probably the case that we're going to balance out over the next few days. And balance out, remember, doesn't mean, so you could have a balanced structure that looks something, this is sort of a normal day. But you can have a balanced structure that looks like this on the individual level, or over the course of, multiple weeks is beginning to balance out, even though the underlying structures aren't necessarily balanced. So you get a lot of dispersion, but ultimately price is trying to establish another higher time frame range. So what's it called? What was I was getting to next, my other BitMEX chart. So the levels that I'm looking at right now. So ultimately I would have wanted this level to hold if we were going to expect that this was going to go on to test the high. But ultimately what this looks like is our April period in the beginning of the year, and I share this chart. It sort of looks like what we had over here, where the trend is starting to get a little messy. Okay, so we have a market that is moving up, breaks above more recent structure. You sort of have this under over, and it's unable to hold the top side of this previous structure. And while it does have this prevailing grind up, it is a consistent pattern of having these impulses back to previous locations within structure, such as this floor, break down, impulse up, no follow through, no actionable support, and then consistently grind about. And still, it doesn't mean that you have continuation to the downside. It's just that we're beginning to move within a larger consolidation. So again, break above more recent level within structure, break down below, you get sort of this trap down here. Market looks like it's going to rip back up towards this high. And what does it do? It briefly treats this as support, and the whole area just becomes very messy. So, I shared that chart 2 days ago, and I shared that in the live stream yesterday, and it just looks more and more like we're sort of setting up for these types of conditions where you can just expect that over the next maybe it could be 2 weeks, it could be 3 weeks, it could be a month, we're going to have a higher time frame consolidation. And then I think that still brings us back to the points that I really like to focus on, which are, and on the morning streams, obviously we don't get too much into lower time frames, which are higher time frame positioning metrics, such as funding, such as basis, and I do look at CVD over the course of a larger structure. So if we're looking at how this is consolidating, again, at a major area, so at this resistance, we want to see consolidation if you're still bullish, right? You don't want to see that the market walked into this level and was majorly rejected. So we haven't found that yet. It's not like we found any kind of major supply or, again, any kind of high conviction seller. But if we're going to continue to auction sideways and consolidate against this level, let's say over the course of the next month going into December, what you would want to see is that consistently there has been this negative basis that is maintained, right? Where you do have, and this would be called a positive basis in traditional markets, where you do have spot that's trading higher. So if we're looking at the BitMEX price right now, just to give you a very quick example, BitMEX spot trading higher. So where we do have this premium with the spot, futures trading at a discount, funding as a negative, again, not necessarily required. The basis is something that I am more considering. And if you have and the chart's not printed yet, but if we start to have a structure that looks similar to the previous, which you have it right here, let me zoom out because it's a low time frame. This is a 5 million volume candle setting. Let's go to the 15 minute. I'll look at the comments in a second. Okay, so if we do have this structure that begins to form and still has a ton of aggressiveness to the downside, like we're not seeing any kind of traders really commit towards the high. So over the course, so far this is a really good example. If we continue to print the same way that we are right now, so we have a structure that has lower time frame trends within it, but the prevailing trend right now is clearly sideways. I think that most of the activity is moving sideways now, and we're going to continue. If we continue to have a case where we have CVD that is making lower lows, okay, spot strength is still there, I think that this is exactly the type of conditions that I would want to see before I have any kind of further move upward. I don't think that by any means that this is leading. So there are some times when CVD might be leading. This might be in less liquid markets. It's not that Bitcoin is that illiquid, but in this case, I think that if we continue to have on the derivatives exchanges, we continue to see this this trend with CVD, and I'm still paying attention to BitMEX because it still is very actionable, then I think this is prime for a continuation move upward. And again, the market moves sideways. Sellers are coming into the market aggressively. The concept is, it's just a concept of doing a lot of work for really no results. So you could look at funding, you could look at basis, you could look at CVD. If you go on Exo charts, it's available there. You could use Sierra if you like dealing with an exchange that's a pain in the ass or a software. But my levels right now are 12.5, 12.6, this area. Okay, so that area right now I'm anticipating us returning to. So we're looking at what is ultimately the end of the single prints within this structure. I'm not going to form a composite the way that we're currently sitting right now. So you could form a composite. At this point, my higher time frame levels I think are a little bit more actionable. But yeah, expect a ranging environment for Bitcoin. If this continues to have, so let's say that, what would be the change for that? Well, at this point, if we break above this more recent structure at, let's say, 3,400, this more recent support and resistance flip, which you could see sort of on the way down, this is the high from here, rolled from that, broke above, treat as support. So if the market is now able to break back above this level, then I'll probably look to 13.8. And at that point, maybe the idea of this ranging longer is off the table. But I'm still on the trading competition account. I'll still look to actually step in front of this because I'm not sure that this is just going to skirt away right now and get on to the all-time high within the next week. Let's look at some of the comments, and then we'll take your pairs and what you'd like to look at. Did I miss anything? Oh, there's one thing I wanted to talk about in this stream, and it was what I forgot yesterday, and then I want to talk about the concept of risk-adjusted returns and Sharpe Ratio. So let me turn on the comments. Cutscene talk. Okay. All right. All right. Yes. All right. So I'm back at the other. Yes. Young Talapa. Hate marketing. Yeah, it's just a weird feeling, right? I want people that. So on BlockRoots, the one thing is, like, not everyone wants to trade the way that I want to trade. So the only people that I want on BlockRoots are people that, not to say that the only people I want on BlockRoots are people that want to trade that way, but I want people to have a genuine interest. I don't want to sell anybody on it. Okay, let's see. My favorite home brewed drip coffee. I go with the Cafe Bustelo most of the time. Okay. In extreme funding, you can see funding get upwards of 8-10 basis points. I haven't seen that in a while. And this is a spot-driven market right now. But, funding, basis, those are why I don't really necessarily care too much about funding, is because the basis is what helps derive the premium index, which helps, which goes into that interest rate component calculation. So I just pay attention to basis. And a lot of time, I don't even need to look at the funding. I could just look at, or I don't need to look at the, neobutane indicator, which is something that I share because you guys can find that easily. I just look at the price difference, right? I'll look at, I have Trading Light open on the other screen, or this one now, since it's, basically 50 inches wide. And I'm looking at OKX, I'm looking at Binance, I'm looking at Coinbase, and then all the futures exchanges. Not looking at price action, I'm looking at the actual just current market price. Okay. So 30-minute rotation size. So it's just an ATR of a 30-minute candle. So what we're looking at right here is ASPR. Average sub-period rotation size, average sub-period range. Your sub-period is your 30-minute bar. So each one of these bars right here within this TPO structure is a 30-minute period of price action. It doesn't say we spent exactly 30 minutes at one particular area. It just means that within that 30-period interval, price was within these ranges. Now, your 30-minute rotation size is your 30-minute ATR, which is your average true range. This is a good thing to use if you're trying to establish norms, and this is a pretty big component of my trading. It's how a lot of the times it's how I play swing failures. It's the amount of distance it's something that I use to inform my stop distance. So if I'm putting a more volatility-based stop on, I use a multiple of this value. When I'm paying attention to the level of compression, what we typically see, and BlockRoots members know, I keep all of the, so all of this data down here, I put that in Python, and I just always have a running understanding of what the norms are for the market. So I know, what to expect in terms of range length, what the average TPO size is, or excuse me, average sub-period rotation is at the end of ranges, at the beginning of ranges, during trending markets, just so I can immediately say, oh, okay, I might not necessarily always need to look at it, but whenever I look at it and I say, oh, it's been at 27 for the last 2 days, I might not necessarily be sure of direction, but I should brace for volatility. Okay, all right. Been hedged and sitting in my hands. So yeah, these streams, we just started the crypto and coffee streams, and you could tell a lot of times at the beginning I start by just kind of going off on tangents, but moving forward next week, I'm going to start integrating specific days for what you can expect. So during some of these, I don't have a script, so I'll find that I'll start off and we'll talk about random shit, and then a half hour later I'm thinking I didn't even look at a Bitcoin chart, and then I look at the Bitcoin chart and I'm thinking people want to know about the low time frames, and then it'll be an hour after the stream and I'll think I only covered the high time frames. So I want to add more structure to these because I'm just kind of flying by the seat of my pants with them, and which I think is good because you get to know me as a person. But I need these to have structure because I want you guys to be able to come on a Wednesday morning and know, okay, we're coming on before market open, and today we're just going to look at charts, or today we're just going to take trades. So no, I haven't used the GAN fan. So when did you start using these tools originally? CVD, market profile? No. So the only time I used these tools was trading equity derivatives and trading crude oil. And equity derivatives don't mean trading, ETFs and options. It means trading the ES and specifically crude oil, which is obviously something that everyone should be familiar with. But when I came to crypto, I was a trend follower because I didn't want to be full-time crypto at all. I just was at the time I was considering coming to crypto as a passive investor, more of I don't want to say passive because trend following is an active approach, but passively trend following. And as I started getting more involved in crypto, and not for nothing, these tools were not necessarily available to crypto the way they are now. I started trading more of the way that I was trading traditionally before I came. So it's great that you have these things now, but when I came to crypto, there was no exo charts, there was none of that. And I certainly didn't bust out the Sierra chart because I wasn't even willing to go on to BitMEX at the time. I don't even know if they had integration. I was using trading technologies for a while. That's fantastic, but I don't think you need to use the latter on Bitcoin. So I was using CVD and market profile. I've used market profile for over the last 10 years. So, but I've been trading for 14, not successfully though. When people like to say, oh, and I started trading when I was 18 and I was successful. No, I was a college student who was really interested in markets, and I would fucking throw away my money. I know you're not seeing the chart, you're seeing the questions. Okay. One sec. I'm going to go because I went over, I went over the rotation sides. Let's go back over that again. All right, so let's do that. Okay, so what I was talking about was this down here. All of these values, I plug these into Python, into Pandas or NumPy. I don't even know which it is because I stepped off the throttle with learning Python. But I plug this in, and what I'm calculating over time are the norms for these values. So average sub-period rotation size, average sub-period range, that's your 30-minute average candle size for the day. The average is 55 to 60 last time I checked. One standard deviation puts you below 35. So it's actually, I think it's 55, and then one standard deviation is 15. So it's an idea. The idea is to establish norms, so I know what stands out as abnormal, right? And then I do the same with my volume value area, my TPO value area. It's just a way of identifying what market norms are so that I could very easily say, oh, okay, again, normally when we are 3-4 days into a range, if we start falling below into that high 20s, low 30s value for our average sub-period range size, I know that we're likely going to have a break shortly. And if that's coming off of a continuation structure, or if that is coming off of a really strong impulsive move, I'm probably going to weigh the long side a bit more heavily, obviously. Okay, what did I miss that I had the chat? Okay. What's your favorite TradingView chart tool? Yeah, I don't use TradingView. I mean, when I started, so the reason, I think a lot of the reason people still use TradingView charts on Twitter is because everyone recognizes them and it gets likes. Before I came to crypto, I honestly wasn't using TradingView too often. So That's just the honest truth. I wasn't really using TradingView. And then it's silly, but you're trying to you're trying to make your carve your space out. And whenever I shared things that were slightly advanced, I would get shit for it. TradingView chart is easily recognizable. If you're trying to teach something, if you're trying to convey an idea, it's easy for me to say, see for example, the premium index. If I go like this, and I'm talking about this, if I'm on a platform like, let's say you're trading on something like TT, or if you're equities trading, you're trading on Lightspeed, and we're talking about the current conditions, I can't say and the same thing works with Sierra, because not all of you have Sierra. I can't really spend too much time on this chart. I could go on EXO, but I can't really spend too much time looking at maybe specific things that are only available on Sierra, because you can't, what am I thinking? I'm taking for granted that you are going to have access to that. And if I'm trying to teach you something I think is valuable, I'm trying to find it on TradingView so that you can replicate that immediately. So my favorite TradingView tool, the magnet. No, I think the things that you'll find on my chart. So let's just look at the things I have that are just always left on my chart. So they're not always on. So I have, your volume. Okay, session volume. Where is this? Here we go. So this is more or less what you're seeing underneath my TPO chart either way. So I have that. Multi-time frame VWAP is important because this is showing me where the market put on risk for these time periods. And again, I just say if you're considering neutrality even, right? If you're not even considering one side being more aggressive, if most of the risk in the last day has been put on, let's just say, for example, the daily VWAP, most of the risk has been put on at 13,347, then if we're trading above where most of that risk was transacted, even if we assume neutrality, you have to imagine buyers are in better position, right? So it's a way of identifying who's in control, which brings us to why I sometimes will put on the 20-period moving average. That's sort of an idea of who's in control as well. So 20-period moving average, the Clark indicator, I made this 2 years ago, and it's so simple. It's not, people create indicators on TradingView and then they sell them, and they're just repackaged shit that's for free. Clark indicator, it's just coloring the bars based on the 20-period moving average. So for that setting, so if we're on the daily chart right now, and you can see the bars are green, it just means I know that we're above the 20-period moving average. Things like this can help you prioritize what side of the market to really prioritize. So meaning when I say what side of the market to prioritize, I mean, do you prioritize looking for longs or shorts? You have to always consider context. So let's say that you're under, we're just having this flip under, I got long down here either way, but if you see this go green right under a major higher time frame resistance, I'd probably weigh the structure a bit more heavily than the fact that we're above the 20-period moving average. That might be a little bit of noise from price moving sideways. But this is a good tool because we also have something like the ATR bands. So I have upper and lower ATR bands, good for placing a stop, good for identifying, again, when we're sort of breaking out of those norms we've been within. Monthly open, weekly open. So this is a Clark indicator. It's free. It's just members of BlockRoots get it. It's nothing special though. Alpha trend, that was my automated strategy that I had built. This is something that has a really good track record. I just stopped using it because I wasn't getting the exact results based on the time period I entered. And I didn't want to put too much money on the line with this. Where'd it go? Oh, I deleted it actually. This is the alert system. Was a valuable tool, but I think that I need to dedicate more time to systematic strategies before I think like I could roll the dice with them. And then volatility stop, which is just a standard deviation band essentially, based off of ATR. So it's only gonna put one band, but it shows me, this is 2 times ATR, and that allows you to. So if you're in a trending market, you don't want to really necessarily rely on the stops that you relied on maybe in ranging conditions, because trends are going to be messy, right? Continuation is never clean. So what you should do is take in norms, right? Norms are normal behavior, normal expected values. So if the trend is, your stop should be informed by volatility, honestly. So if you're trading a market that has an average daily range, let's say, of $100, if your stop is $10, okay, that's a tenth of the average daily range. The lower time frame you go, the more actionable that is, because if you say, let's say, your average 30-period range size is 50, and you have a stop that's 5, just to be as extremely ridiculous as possible, you're saying that a good stop is placed tighter than what the normal price behavior is, which is clearly a ridiculous concept. So you need to know what normal volatility is, so you could say, well, my stop actually needs to be outside of that, because maybe that's just noisy price behavior, and I certainly don't want to be stopped out from noise. So yeah, there's plenty of indicators though that people use on TradingView, and they're trading fine with them. Okay, can you comment on BTC volume on Binance and how it can make crash? You know, if you get a lot of OI build up, and I'm not going to go too on about this, if you get a lot of open interest built up on a derivatives platform, and you get a lot of late entrants either to the top of the low of a trend, the unwind of those participants is what makes the market move violently. Meaning, let's say you get the high is broken up here, you get a bunch of people aggressively long on BitMEX. You don't have that, let's just add in some other factors. Spot is trading at a discount now. Funding is going positive. The market is very long in that sense, in that pocket. When those traders unwind their positions, that can cause obviously a lot of downside volatility. We're not in conditions right now, I think, where that is the case, but that can move the market in the short term. Kidoki. Any pairs you guys want to see? What I wanted to talk about is the Sharpe Ratio. So this is, and the best way to convey it, and I'm talking about alts recently, alts are not really worth the risk a lot of the times. So if you see that, okay, so I'm going to give you $10. There's $10 on a sidewalk, okay? And then there's $10 in the middle of a highway. Those are both $10, right? $10 more than you have in your pocket right now. But are they worth the same amount of money, right? Are they worth the risk involved in, you know, procuring them? No, obviously not. The one in the middle of the highway is not worth the risk. So that's the best example I could give you for the Sharpe Ratio. So the Sharpe Ratio is, you know, your return minus the risk-free rate divided by the standard deviation of return. So divided by, just consider volatility. So if you have an asset that, you know, returns, let's say the asset returns 3%, okay, and the risk-free rate is, we'll just keep the risk-free rate at 0 because there is no risk-free rate right now. The S&P is the risk-free rate. Let's say we'll keep it at 0, and volatility is, let's say, 6. Okay, so this leaves you with a Sharpe Ratio of 0.5. All right, and now let's say, and this is Bitcoin, okay, let's say now that we have 3% return, all right, and you have a volatility of, let's say, 21, okay, standard deviation 21, volatility 21. Okay, same percentage return, 3% over time, much different in terms of standard deviation of returns, right, in terms of volatility. This leaves you with, what do we have when we have a, what is that now? Is this a point? Why am I doing shitty math right now? That should be really, I'm thinking 7, but no, that's not it. It's 0.14, and yeah, 3 divided by 6, obviously. Yeah, so this leaves you with a Sharpe Ratio of 0.14. Okay, this is a terrible Sharpe Ratio. Same return, but you're taking on a lot more risk for that amount of return. Your Sharpe Ratio, obviously, you want to have it as high as possible. Now, some strategies like trend followers, they might have shitty Sharpe Ratios because there is a lot of volatility, and you know, they're going to deal with drawdown. But what you need to do is, I think, start considering the amount of risk you're taking for the little bit of incremental price movement that might still be there in some of these alts. Because it is sort of like you are, you know, the concept of picking up nickels in front of a steamroller. At this point, it is that you are taking on a lot more risk, when I think that Bitcoin and things like, it's only really Bitcoin if you ask me right now. I can't see anything right now that is outperforming, because DOT fell off a cliff, ETH fell off a cliff. So really it is, I think Bitcoin is front and center. Your alts right now, I think they just offer terrible risk-adjusted returns, because you have to deal with an incredible amount of volatility now, I think, to get what might be in the future those higher returns. So let's say, you know, 2 months from now, one alt returns 50%. Let's say that Bitcoin returns 25%. Okay, Bitcoin has likely or arguably a lot less volatility on that route there. Okay, whereas the alt, you might have to incur another 50% drawdown before you get to that 50% return, which from that alone would not leave you with a 50% return, because you obviously know that when you lose 50%, you have to gain back 100% to gain that back. But just to really simplify the idea of risk-adjusted returns, because I think that Sharpe Ratio is good if you're, employing a systematic strategy, or even if you're just keeping track of your returns either way for discretionary trader. But just consider on a per trade basis the amount of risk you're taking to really capture a little bit of upside that might be for the alts that you're interested in, rather than waiting for a little bit more solidarity and a little bit more confirmation whenever the weekly levels and the daily levels are reclaimed in these alts. And this gets us to the point I was trying to make yesterday, which is Suzu was talking about how the composability of alts, how on the way up everything is correlated, right? On the way up, a rising tide lifts all boats. You have all of DeFi that's rising. So I think I have a DeFi list. So on the way up, we'll zoom out. So on the way up, everything moving together, right? All of these charts just vertical, not that one. SNX, look, this is what happens. They come all the way back down. So just be prepared for that. Ren, not bad. But Ren having longer price history. On the way up, everything is correlated. And then on the way down, MTA is just looking horrible. You can't even look at these charts on weeklies because they're not old enough. On the way up, everything is correlated. And people play off of these correlations. They take trades because of that correlation. They say, I'm getting into a trade, the same way we talk about leaders and laggards. I'm getting into a trade with, YFL or whatever the other Wi-Fi is, because main Wi-Fi is going up. So Wi-Fi version 2 is going to go up as well. I don't even know what the fuck the name of it is. Excuse me. And then on the way down, people start really talking about how their coin has fundamentals, and it's not their coin that's going to be correlated at that point. In traditional markets, all correlations go to 1 in poor conditions. So when things are shit in the bed, all correlations go to 1. Correlations fluctuate on the way up. But to assume that now, when things are crapping the bed, that your correlation is not going to be there, it's like you're prisoner to your own mental flaws at that point. It's a cognitive bias. And it's just, I was trying to think of that yesterday because it was a really good point, I thought. And when I was going on, I was saying something like, I gave this long-winded approach where I was saying, yeah, so, Suzu, brilliant guy, Laputin, Gulliver's Travels, saying all this shit. And then by the time I got back to what I wanted to say, I tried to, I think I was like, yeah, let's look at this chart to show you what I mean. And I'm trying to think, what was I talking about? But the composability of alts. So thank you, Kilgore, who brought that up. Does anyone want to chart any specific pairs right now? It's been kind of going on. So looking at, for what are we looking at? BTC for swing longs. So just to give you an idea what I'm looking at for the intraday setups. So what my plans are. Okay, so you almost have, I don't necessarily pay attention to inside days based on the range of price movement. So this is not necessarily an inside day. Some people talk about closes and opens. This is not necessarily an inside complete day, but we have inside value so far into the day. This is not a balanced structure. I would actually look at something like this. So I would maybe compose 2 things together from the last 2 days for a potential break from this balance that is not necessarily balanced over the last 2 days, but I think could be used as, could be combined to inform a break of this structure, which is confluent with the idea of breaking back above this high either way. So it's not actually that important to focus on that, I don't think. I think that I'm more interested in this location right here. So if we're back above this, right, I'll target 13.8 because I think that after you turn from this resistance, and we had this trap yesterday. We went over that in the live stream as an awesome trap. After you put in a higher low right here, I think there's a high probability that you gun that high. So looking for the long off of this flip, right? Any kind of sign of strength up there. I don't necessarily need that retest because a lot of the times you don't get the retest lately. You get the candle that is a firm move through that, good amount of volume, and you see the bid is still there, and then the next thing you know, it's skirting up. At that point, I'll be looking for the initial if we do something like this, move up vertically, I'll look for that swing up at the high. And I think I still have that set up that way. This is the trading competition account. What I do, I remove those. So yeah, I'll go ahead and replace those. And this is, we're going to trade on this with 50,000 contracts. Just want to scale those out. Excuse me, 30,000 contracts for the account size on this one. And what I want to do is place this about one rotation size above the high, just so I give it a little bit of breathing room. And I'm not just talking about this high right here. I'm talking about that line that I have, which is the higher high. This is fine up there. What I'm looking for is something like that if we break above this high. But I want to just leave those there either way because I want to catch one of the wicks on the competition, honestly. Let's see. But yeah, I think this, I think if we lose this level, like if we're not able to rotate off of, if we're not able to reclaim this level, I think you get something that looks like this, that comes back down to these lows. I think ultimately you come back down to these lows either way. If you're going to ask like what my high conviction idea is, I think it's that we come back down to that 12.5 level within the next week or so. So whether that occurs like this, right, not necessarily as extreme, but whether that occurs by us moving up to the high first and then building in a higher time frame range and then finally testing that low again, or whether that means us rolling from here. It wouldn't be the worst thing though, so no one should be really afraid. The good thing about this structure though, if you're still hyper bullish right here, is that we are making this series of higher lows on the way up. And you are sort of compressing against resistance, which is, you know, bullish in this case. Any other questions, guys? ETH BTC, and then we'll wrap it up because we're about an hour and 20 minutes into it. Yeah, the next area, you know, it's still on my chart. The next area I have for ETH BTC is down here. I don't want to buy ETH BTC anywhere below any of these lows. I just look to the next area within major higher time frame structure. I don't want to try to step in between there. I don't think that a lot of people do. So I think that that's what leaves you with the self-fulfilling nature of this coming down to the next major area and testing that. So not, you know, it's kind of, you could say maybe it gets front run at this location, but ETH is showing relative weakness now for the last month. So, but yeah, if we don't have SXP, then we're going to wrap it up, guys. So, let's see. Yeah. I imagine SXP takes out this low. And at this low, I wouldn't want to be in something until it takes this low out and then shows a sign of strength back above. And that's like, that's all we have to go off of, really. Let me look at the USD chart because it's kind of shit. So in a structure like this, if it was just taken off of this alone, I would say I don't want to trade this until it's back above this level. This is on a daily. If we looked at it on a weekly, it's back above these lows essentially. If this begins to form some type of structure on the lower time frame down here on the daily, do something like that, base out, maybe start retaking more local levels, then I'd be interested, but this just looks terrible to me right now. Plans for the rest of the weekend? Not offhand that I could think of. My wife probably has plans for me. I just don't know about them yet. But I think we're going to wrap it up, guys. We're about an hour and 20 minutes into it. I went over Tezos yesterday. Tezos looks like crap. Yeah, Tezos is just falling off a cliff. They're all falling off a cliff, guys. I wouldn't want to be in Tezos until it at least comes down here to interact this previous cluster. Wouldn't step in it between here and there. Think that it probably comes back all the way down here. Ocean, I will check Ocean. And then that'll be it. That's ugly. Yeah, that's ugly, man. You would have wanted to see Ocean obviously build support back above this daily level. Previous range, breaks down from the range, retest it, break above. Now, it's just to cover something that we went over yesterday too for Bitcoin. For me, for ranges, obviously the most bullish scenario would be this. You have a consolidation, that's fine. Break down below the consolidation, that's not meant to have that weird butt structure. Something like this, you break below, fine, you trap a lot of activity up there, rip back above. Now from here, bullish needs to mean up here. Okay, the deeper the retrace, the less shallow it is, the less bullish it is. Okay, because once you have a range like this is just the same way I trade with market profile and my composites. Once we have a range like that, I want to see that buyers and sellers are willing to take this up to a new level, right? Had an imbalance, reversal. Now we shouldn't fall back into a previous level of consolidation and agreement. So this should act as support, the top side. If you fall back within here, you're just going to spend more time ranging again. And at that point, I'm out of it. So this level, I think, was your level. If you look on the weekly, it's not, yeah, it's just very messy. It's not looking good. And a resistance flip, break above, and it should have treated the top side of this as support. But you lost it, everything's ugly, guys. Everything's ugly. We can't make shit look pretty. So, and I'm trying to, doing these coffee and crypto streams, they'll be really fun when everything is moving up and we could share the next chart and oh my God, let's all hop in that. But right now, I think being a realist is very important. So yesterday when Wi-Fi was at, what was it, yesterday when it was at 12 something, I said, I'll see you down in 4 digits again. And a few hours later, Wi-Fi dropped about $1,200. So it's all getting washed out because you have in these structures, so in things like this, in this massive parabolic trend, you have people that were buying up here thinking the momentum was still coming. So you get a ton of supply in these assets at the highs. And as you approach them, the people that got long up here, they might still say they're confident. But what they're going to do is what I might do. We come back up here. You know what I'm going to do when we get back up towards my entry? I'm just going to get out of it. I'm going to rethink it. And I'll get back in when it moves up higher. I'll get back in after it forms the base. I don't want to be in it though. So I'll close my trade out. You think that what? The price is going to form a base at the same level that everyone else is thinking that? So everyone is going to be selling a little bit earlier. Price moves back down. Okay, we get a rally. Okay, the last people that got in long here. Okay, you know what I'm going to do? I'm going to get flat when we get towards the high because I'll reevaluate this and I'll get in after it shows support. All that selling pressure. Okay, and then what happens? These things just continue to go down like the euthanasia roller coaster. So that's what's in process, guys. Jon Snow from Game of Thrones. My wife loves that. All right, guys. Everyone have a yeah, send that to me on Twitter, dude. I'd be happy to look at that. Everyone have a fantastic evening, though. We're gonna wrap it up. I thank you guys for hopping in the stream. Check out our partners at Phemex.trade. That's the exchange that I'm using. It's got the best execution. I mean, I'm rapid firing trades, and there is no lag. And during volatility, there is absolutely no problem whatsoever. So go to Phemex.trade. You'll get the discount from us, and yeah, this is not looking. It's not looking bad. I'm just not. I'm not interested in it right now, and part of that is due to the fact that I have a nice spot position that is sitting comfy, and I don't want to mess with this too much. I think the best thing to do right now is to zoom out, and this is one of the. One sec. This is one of just the best looking trends I've ever seen. You can't ask for more than that. That's just. In terms of symmetry, in terms of, oh, history doesn't repeat itself, but it does rhyme. This is rhyming hard. Okay? I don't want to mess that up. That's why I'm looking at things right now like the higher time frame weekly 20-period moving average and not trying to get shaken out of this, right? Everyone have a fantastic evening, though. I will see you on Monday morning.